Let's take a look at the chip sector. Green arrows across the board, at least right now, pre-market. Joining us, Chris Caso, Wolfe Research senior analyst. Chris, great to have you with us.
Good morning.
What happened with Oracle, with the OpenAI delays, with Broadcom? Has that changed at all the way investors should look at this sector?
We don't think so. And the Broadcom report from last week was really quite good. They're still upside to the numbers. They're looking at doubling their AI revenue next year, and with the potential of doubling the year after that. I think what is really the question on the mind of investors now is that all these orders that have been placed in the chip companies, will the money actually get spent? And really, will there be enough monetization on the part of these on the part of the end customers to justify the purchases? And our view has been that, especially with the rise of agentic AI coming next year, if you're not spending the money next year, if you're not in the capacity, you're just out of the race. And we just don't see that happening.
I mean, you cover chips, but you got to take a look at the hyperscalers and also take a look at Oracle in terms of deciding whether or not that money will actually be spent. In your view, is there a chance that the upwards of $400 billion projected to be spent in the next 12 months by Amazon, Google, Meta, will that actually be spent, or do you think that gets dialed back? Because investors are increasingly looking for hard proof that there is an ROI to this spend.
Right, and we've done some analysis ourselves, and it does show that these deployments are getting a positive ROI. I think the concern is just the numbers are getting so large right now. But again, what we think over the next 12 months, if you're not spending, if you are whomever, whether it's OpenAI or Anthropic or Google, and deciding we're going to hit the brakes on spending right now, and your competitors aren't, you're going to be left behind in the race. So, I guess there's two things here. One is the monetization and getting the ROI in the near term. The second is just the cost of participating in the AI race now requires you to put that money to work.
Right. And then can you walk us through your thinking on competitive TPUs? With the rise of Gemini, the success of Gemini 3, there was some thinking that Google's TPUs, were going to be competitive to NVIDIA, and that's going to threaten NVIDIA's business. How do you view this?
And they really are. And we kind of see it coming down to, from a silicon standpoint, there's two major platforms. There's the NVIDIA platform, which works with everyone, and then the Google TPU platform, which largely has worked with Google in the past. And what's changed over the last couple of months is Google has started to look at expanding that to some others, such as Anthropic. The reason why those two platforms are the two most prevalent platforms is because they have the most performance. And now AMD with MI450 later this year, looks like they'll be a participant as well, although smaller scale. But the difference with the custom projects, these XPU projects like Google, is that they don't work with everything. So, we kind of look at the market that about 75% of the market will be these merchant solutions. That includes NVIDIA and AMD, because they work with everything, because they have the software support. The custom solutions like Google, and at this point, Google is really the only one that's on its 7th generation and is able to scale right now, handles a subset of the different workloads. And that's why we think it's important. We think it's competitive, but we think it stays at about 25% of the market. And even, some of the numbers that Broadcom has been throwing out about their, it supports that number.